I know it's always a challenge to speak after lunch, but I trust you'll keep the lights on so that people don't go off to sleep. This is a topic, I know you guys have gone through a very exciting topic in the morning. This is a topic very close to my heart. I know you heard about my, banking experience, technology experience, media entertainment and analytics experience, and now, of course, how we are morphing in First Data, the entire banking side of it, and calling it payments. And you heard Modi's dream, the 10-point dream. The 3-point dream of his, out of that 10 points, closely resonate to what we are all talking about today. First dream, he says, I have a dream of digital India. And that is what we are all driving to. Second dream, he talks about mobile and payments are going to drive inclusive behavior. And the third, he's talking about e-commerce is going to drive entrepreneurship. Now, I think it's so relevant in today's world. And when I reflect on this topic today, how do we build a profitable payments business? It's not different from what I was trying to struggle in the late 90s when I was actually setting up the payment business for HSBC in Asia and India. And frankly, I was just discussing with my panelists that the challenges remain the same. When you looked at profitability and carved out a P&L in those days, a lot of the money had to come from the current account floats and the net interest margin, and the transaction fee was not something that you were able to get from the customers. The instruments were different. In those days, we had cashier order, demand draft, remittances, but now, of course, subsequently moved into cards and POS machines. But the challenge is, if you talk to the bankers, I don't know how many bankers we have in this room. Can I have a hand up of people, how many bankers here or people who are connected to banks? Only a couple of them. And if I were to ask them, about profitability of payment business, I'll tell you they'll still struggle. So what has changed? And in today's deliberation, which I think we're going to hear 4 experts who very clearly realized, and I know many of you are there in this room as well, who are experts equally, who are changing the game. So I think what has happened is the evolution of payment as a traditional business, which was like given, you had to have it. It was almost like a basic requirements because payment is what your customers needed, whether it was payment inside or going out or paying someone or fulfillment for trade. So payment was very basic, and a lot of those banks in those days didn't have payment system, had to put payments in place because the customers were asking them. In case of HSBC, I know our customers said, we're going to defect because Citibank gives a very good GTS services, so we actually evolved with that. Today, I think payment is given. You have to do payments, but you have to do it efficiently. So I think what has changed is the entire business transformation has taken place on the way you bring payments to the, at one end the customer, the other end the banks, and other end the provider. And I think what you will see is how this disruption is taking place from a cost-based provisioning to a value proposition-based provisioning, which is driven by how do you become a partner of your customer and drive their revenue. So it's a revenue value proposition. So with that theme, let me just kick off this and then open it up to the panelists to share how they're seeing the evolution and how they believe that the profit pools are going to be driving. So let me start with you, Karthik, because I think you have an interesting concept there. So why don't you share your view on this entire thing?
Sure. So you're right when you say that as a payments company, you're enabling commerce to the merchant. You're enabling customers to pay at the merchant place. So if you want to charge higher margins, there are 2 levers you can play on. One is to enable the merchant to get higher revenues, to increase footfalls, to upsell to his customers. That's one route. If you follow that, the merchant is willing to pay you, say, 2x of what he pays to a normal payment processor because you're adding revenues to his business. And second is to bring stickiness on the customer side. The experience of paying is today it's disjoint from the buying process. For example, you consume food at a restaurant or you put your basket together at a grocery store. And in the end, you have a separate billing process, you have a separate payment process, you have to wait for getting your check, and then you give him your card, you swipe your card. So if you could contribute to the experience, if you could bring in payments as part of the purchase process, and hence the customer is eased through the process, then the customer is sticky to your product. and hence you don't need to spend on customer acquisition per se. And if you get customers repeat transact on your app or on your payments medium, and hence you can get more customers to the outlet. Like if there's an off day, if a merchant is able to use your mechanism to send offers to say 1,000 customers and 100 of them pop into the place, so then the merchant is willing to pay you say 3% MDR instead of a 1.5% MDR, which is what Amex does. So Amex brings stickiness on the consumer side and enables merchants to get higher revenues. That's possible on the digital side, which is what we are trying to do at Momo, where we enable payments at real-world outlets, at restaurants, at grocery stores, at apparel stores, but contribute to the revenue of the merchant, get more business from the customer for him.
So good. So I think the customer experience is the key differentiator. And I hear this with a lot of the new e-commerce companies and others saying, I want a seamless, multi-channel, multi-experience customer, because that's what gets me stickiness. So what you're saying is the convenience is what is driving preparedness for the merchant to pay that price or the customer to pay that price.
Yes.
Now, I think that is at the customer's customer end. But I think, Rajeev, I'm going to ask you on how you're doing both the customers as well as the customers by giving an aggregation and creating a kind of a business model which is simplifying a lot of things at the end of the merchants.
Yeah, hi. So I think, so the topic is very interesting, meaning I think in the past couple of years, very, very large number of payment companies have got formed, and all of us are very excited to figure out how this whole space is transforming and generating profits. So creating high margin business out of payments is definitely a very exciting thing. How are we doing it? What I thought I'll share with you guys is probably 3 themes that we typically use to decide which business to get into, which product line to get into or not get into. Because it's not so much in terms of a specific product that you work on, but really, as Swarup was saying, fundamentally, is there a value proposition behind the theme? So I think one of the things we have observed over the past few years very actively, starting with the offline space. By the offline space, I mean the retail space, and then moving today into the e-com space, is the processes which surround payments. So payment by itself is a transaction, right? Meaning you are purchasing a product or a service, and therefore you're paying for that using some instrument. But there is a large number of processes pre and post the payment transaction, which for a merchant or for the seller of this product or service has a cost. And if you can help in simplifying the processes around management of the payments, it really helps in reducing the cost for that business. And that's money there. There's straight money lying out there. We have seen cases where the seller, that is a merchant, may be bargaining heavily with a bank for what is called as a MDR or the rate at which a transaction is accepted, but an equal amount of money he'll be ready to pay you because of the fact that you are helping him reduce the cost of managing that payment transaction, right? So I think there's a lot of, and what has evolved there, I think dramatically, again, starting with offline and now online, is the fact that this has become industry specific. So the way you manage payments in education is different from the way you manage it in entertainment. It is different from the way you manage it in hospitality, in retail. Whereas traditionally, a banking system takes payment as a transaction. So you originate something, it gets authorized, you get an approval, end of matter. It didn't matter really whether it came from an Indigo or whether it came from a Taj Hotels. But the processes surrounding it are very different, extremely different. So if you have bespoke, customized solutions built around payments management, tremendous amount of value there and tremendous amount of stickiness. So that's one. The second thing which we have found very interesting is, as Swarup was mentioning, that payment technology is now a given. I don't think any bank or any entity being in the payment space can afford to say that we don't have a fairly sophisticated payment technology base. It's just a given. What is exciting we have found as opportunities is how do you use a payment channel to not just deliver payments, but deliver other financial services which are supplementary to payments. So let me give an example to that. So you as a customer is transacting and you're buying a product or a service and therefore money has to flow. But what if I didn't have the money at that point in time? What if exactly at that point in time I wanted a loan, right? Now, loan is a very different kind of a financial service. It's got nothing to do with payments. Payments is a seller and a buyer transaction. A loan, suddenly a lender has come into picture. But if you can facilitate that action through the payment channel, which is a tremendously powerful technology that has been created, it is so streamlined, amazing amount of reconciliation, dispute management, huge call centers, huge operational things. Suddenly you are using a very highly efficient payment system for distributing yet another financial service and creating a lot of cost reduction for that financial service delivery, and therefore again money, right? A lot of money lying there. So there are multiple services that people have actually thought through this. The last bit that I will just touch upon, a slightly long-termish, if you like, which comes close to saying that it's a redistribution of who pays for what value. So today, I think in the payment system, there are some aberrations. A merchant pays MDR for a credit card that is swiped or accepted on his website, but the credit is actually given to the consumer. Now, why should, when you buy a car, the guy from whom you're buying the car does not pay the interest on the car? You as a consumer pay the interest on the car, right? You buy a house. The guy who has sold you the house, he may give you a benefit or whatever, but he does not pay the interest on your housing loan. Then why in a merchant scenario is a merchant paying MDR for a credit card transaction? So the value of 45 days credit is actually coming to the consumer, but the interest cost for that is being borne by the merchant. So there is, and internationally it has happened, the whole movement of the cost going to the party who is benefiting rather than somebody else bearing for it creates a tremendous opportunity, because that is a steady state situation. It is bound to reach there. So it's a question, if you have solutions or if you create products which are aiding that, automatically the ecosystem evolves and picks them up. If you have products which are pushing against it, well, your margins also go down. So these are three themes. Like I said, payments management on one side, using payment channels for other financial services, and third thing is take the cost to where the value is. Thanks.
Thanks, Rajeev. So I think, one of the things, and it's not new to you guys, is how do you change the business model? So how did, let's say, Kindle change the model and the way people read, or Uber changes the model or is changing the model? I think hearing to Rajeev, clearly it shows that while he's come from a very telecom background, he was listening to the merchant, to the customers, looking at the pain point, finding solutions which can simplify. And then he's going deeper. He's peeling the onions and saying, how do I extend that wallet? How do I stretch it? How do I give extended services, whether it's reconciliation, value provision, inventory, etc.? And I think then define the profit pool as an outcome, as against just a services cost. So that's a very interesting concept. Now, one of the things I read, in fact, is that the existing banks are really running helter-skelter to retain customers as the new generation fintech companies and the smaller banks and the payment banks are going to come to India. And I tell you, I called a lot of my old friends in banks. A lot of them are CEOs today, and they said, yes, it's true. We don't know whether we will exist, So this game change is happening, guys. I mean, you guys are making a shift in the way this entire business is going, the way payments is defining. It's not only Modi saying, payment, mobile and payment is really what is going to drive the thing. Now, in that perspective, I was talking to a bank, and he said, you know what, these wallet companies, and if they keep creating all these wallets, I wouldn't have saving account holders. They'll have a saving account with Alipay and Amazon and all these wallet companies. So, this is a good segue for me to really ask you, Vikrant, to give your business model and share in this topic,
Sure. Sarup, I think the problem that we are trying to solve here is not about a micro environment which me and you can solve. It's looking at a macro environment. According to me, I think let's take a step back and let's see the overall transaction journey and the players of the ecosystem. Today we talk about margins. Single payment is actually divided into 6 players. There's an acquirer, there's a processor which is an FSS or an ATOS here, There's an MPI plugin, there's an issuer, there's an association, and there's an ACS provider. Now look at the margins that we are looking at. It's like one pizza divided into 20 people. What are we going to get? First, the point that I'm trying to make here is actually I was very excited when I saw Mahindra Comviva advertisement or probably one of the sponsor here. I think it's the technology which is the problem solver here first. How? Somebody needs to own this as a piece. I come from a background in Wipro where I was in US for 5 years working in hardcore IT systems. I think companies like Wipro, TCS, Accenture, they need to take a consulting of payments as a different vertical and come and solve a problem. From a technology perspective, we could be outsourced to one point rather than multiple players of the ecosystem or the stakeholders. Very interestingly, you mentioned about the banks. I saw a few hands from the bankers fraternity here. I think one request is that we need to treat acquirer and issuer as individual businesses rather than under the one roof. And Swaroop, you'll have to second me for that. Today what happens is acquirer business is a very, very different, complex, analytical, data-oriented, post-service business. It's just not about issuer. However, if you're looking at a complete P&L together, of course the bankers will be in profit because they're making decent amount of money from float or they're kind of distributing their cards from an issuing standpoint. Best case scenario, they would need to outsource it to people like us who could manage the payments from the acquirer standpoint and of course work as a complementing thing rather than as a competition. And I think there are certain bankers who are much more willing to have these kind of discussions. That is a very healthy step towards the solving of the macro environment problem here. Last but not the least, I think it's the regulator which plays a very important role here. As of now in the country, only acquirers, which are the banks, have the licenses to process a payment. I think this needs to be solved and requested to the regulator from people like us here sitting in this room, so that even aggregators should have the authority to process payments rather than only the acquirer, which would help develop the payment ecosystem at a much broader level and of course brings a lot of value proposition and value to the entire ecosystem. So Swaroop, I believe that these are the three macro environment points which we need to solve from getting the margins thing sorted.
Thanks. So I think expand the players, more level playing field, and look at equitable treatment. I think there's a lot of representation being made to the government. I know you guys heard about the MDR capping, Reserve Bank. Right. Funnily enough, I was talking to a few regulators and few people, and they said, well, that's done, but I don't think it's really improved the spend. I mean, on debit card, 500 million debit card, the spend is still, 20 billion. And the credit card with a 20 billion credit card, the spend is 30 billion. So I think we've got to do something very distinctly different. And as the government in the budget tabled, that they want to go towards really giving fillip to a card-based payment. I think there were propositions about if you go to the hotel and you want to pay for your tea, which is more than 5,000, you're going to use a card. I don't know if those are getting done by incentivize. But I think Dr. Preeti is an interesting background. She was a professor and she said, I don't call myself doctor, people may misunderstand me as a physician. But I said, I think, Preeti, one of the things you're driving is this cashless economy. Out of 1.1 trillion, 90%, 95% is cash. How are you going to do this? Because if you crack it, maybe Modi will induct you in the ministry or something. So do you want to share with the crowd, how you're going to do this?
So I would look at this way. Today, the entire Indian economy is an issuing-driven economy. So we have 500 million debit cards, we have 2 million credit cards. But if you see on the acquiring, on the acceptance side, we are very minimal. Because the industry per se, it lacks a lot of incentivization given to the merchant, to the customers. And for them to increase acceptance, you need to make life easy for the merchants. So what I come from is, so a person has a current account. Okay, so he needs to submit a KYC. If he wants to go for a credit card, again he submits a KYC. If he wants to go for a payment, again he submits a KYC. If he wants to go for a point of sale terminal, again he has to submit a KYC. So what are we doing here? Are we trying to make a merchant's life easier or tougher? At the end of the day, it's like, yaar, nahi chahiye POS terminal, payment gateway, yaar, forget it, I don't want it. I mean, apart from Janam Kundu, you have everything of that merchant. So how do you, I mean, the change needs to happen from the top. So why not a person with a current account automatically gets a point of sale terminal or a payment gateway because the KYC has already been done. So I think the innovation has to come. It is not only about technology or about getting the best innovation. It's also about the change has to happen all over the space, right, from the regulator, from the banks. And as a payment aggregator, we stakeholders are the key people who have got the change in the industry. So from just a mere transaction, payment is now not limited to a transaction. You have a lot of innovation in the industry, so it's not only you just going on a payment gateway, swiping your card on a point of sale terminal. There are MPOS which are coming. There are payment gateways who are there, who are gives you analytics about your customers, about your repeated customers. So many things are there. So I think when you want to go for a cashless economy, obviously technology is a key role. A lot of value-added services you need to provide apart from just accepting a card. But I think the shift needs to happen on a very bigger role, right from you doing a simple KYC. I mean, we don't understand what's a merchant onboarding process, okay, for an aggregator. I mean, why you need to onboard a merchant where a KYC is already done for a current account? I mean, so we're trying to figure out, we're trying to speak to the regulators on making things more easier for the merchants to have a point of sale terminal or a payment gateway. So I think when the shift is going to happen, so I think you can see the acquiring space in much more greener and bank pushing this space rather than they only concentrating on issuing. I think even acquiring will be a lovable business in the future.
So yeah, technology is going to drive it. I think what I'm hearing also about the cashless is the pain of moving cash through an intermediary. You know, I've heard about Angadias, I've heard about various informal channel, has hidden costs, which itself could be part of the profit pool. So as you talked about, I think a couple of themes we discussed, and I want to just go around back to the panelists. We have a couple of more minutes before we open up for questions. Is one theme came clear saying, hey, the good old, mantra of payment, the way it was done as a matter of an engineering exercise, issuing things and doing it at a cost plus is not going to work. It's going to be value-based. So we heard about value-based. We heard about stakeholders. We heard about the merchant. We heard about the beneficiary being the customer and prepared to pay. And we talked about convenience and stickiness to a bigger ecosystem. So why don't I go around again and give you guys, a minute each to talk about any one of these topics which you raised, how that's going to facilitate us to drive this profitable and high revenue stream business. Sure. And then we'll open up for questions. Okay, who's going to?
I think I would take the lead.
Okay,
okay, so I would concentrate on three things. One is faster go-live process. Second is a lot of value-added services you get to your merchants and to the customers. Like not only just swiping your card, you give a lot of other, like you have customer retention which stores your mobile number and customer name on the app. Okay, apart from that, obviously the third most important thing is innovations. You need to keep on innovating a new product. So the stickiness is there to the product. And obviously last is a lot of support from the stakeholders like the regulators, the card association and the banks. I think when you get all these, this space is going to become much more hotter than what it is.
First, banks needs to outsource the acquiring business to people like us and act as brothers. Second, regulator needs to allow people like us or aggregators to protect more payments in terms of just not acquirers. Second, a technology partner needs to invest in the payments domain.
I think from our perspective, I think the most exciting opportunity lies really around seeing how you can do credit distribution using payment channels. I think it's a tremendous opportunity at a consumer level, at a business level, and it's a very, very nascent stage. So our focus is that.
If I had to repeat, I would come back to user experience. I would say payments has to be part of the user experience. Payments has to be provided as an experience. And the moment you made payment digital, the moment you're making payment on the phone, the form factor of the phone allows you to do a lot of things. So take the entire checkout process and try to ease the process. Then you get value on the consumer side where he feels that paying with the phone at any kind of an outlet. It's easier than, say, swiping out his card or paying cash. So, and it has to be at a very use case specific level. It requires solutions. For a restaurant will be different from a grocery store, could be different from an apparel store. At each merchant category, you'll have to look at easing the checkout process. And second, I would again harp on how you can add business to the merchant. Traditional payment mechanisms do not reveal any consumer information. If you could add some value on the consumer information, on the CRM side, telling a little bit to the merchant about, hey, this guy spends average 5,000 rupees when he goes out. Those kind of insights can help the business upsell and get more customers to his place. These two levers can help get more margins out of payments.
So I think we've gone through it. I'm going to focus a little more time getting some views from the audience here, because you're a very knowledgeable audience out here, and then have question answer. But a couple of observations clearly coming, I think, is that we have to get into a value-driven, experience-driven, value creation-driven theme rather than just the old beaten style of payments. Bankers who are in this room, and I used to be one, let me alert you guys, wake up signal for you guys to really get on your feet, because we have one of our panelists saying, please outsource everything to us. So, be careful. And if the government allows all the so-called tech fin and fintech companies to do that, I think the banks will have to realize different profit pool from maybe their credit or whatever treasury income. The second, obviously, the interesting idea, Rajeev, is about enabling credit. I think that is something which I'm seeing a lot of that, but really that is what is the stickiness. I have never negotiated with my banker when I borrowed the money, even at 10 bips, he wouldn't give me cheaper. Even with the doctor, when I went, I never negotiated saying I'll pay you 500 rupees less, So I think the question is the negotiation power, and which adds to the profit pool, is driven by those compulsion value propositions. So that's a good idea, because everyone needs credit and disciplined it. And the extension, the third thing you talked about, and I think you were also talking about, Preeti, is, the customer footfall, the analytics, and how do we really get more information on the customer stickiness, footfalls, how do I get loyalty programs across, how do I attract and retain my customer and become their port of call differentiation, is all going to drive the way the new generation payments business is getting designed, and a lot of you have already done that. So I think that is true. Obviously, one of the things we didn't cover in depth, and I'm sure they must have been discussed in this forum, is on the whole evolution of e-commerce. And I'm hearing that by 2030, e-commerce will be 2.5% of our GDP. By the way, I heard the same about GST, that 2% of our GDP will be coming from GST, which is about to come. So think of e-commerce being at par with the GST provisioning, and we have to look at this as a real business model change, where now the footfalls at the big stores at Christmas or Diwali or all these ceremonies are declining. People are going online on e-tailing and e-commerce and e-booking. I think this is a space which is going to be profitable, at the same time very interesting to watch. Thank you, panelists. I think, guys, we are out of time, but you guys have been a great audience. I know there's one question from there. I have to ask the organizers if we can exceed the time. I was told we'll get bonus points if we didn't exceed the time, right? So we can't, right? There's one question. You can ask it or send it by email. What do you want? Whichever. Ask it? Okay. If it's a burning question, why don't you ask that question?
I'm Yashwant from Intellect Design Arena. I've just got a generic question to the entire panel, actually. So when we just talk about the data being shared across multiple platforms, no matter, I understand that we'll be just taking care of the data by encrypting and decrypting the data, but the question is more about data integrity. So do we really have some measures taken care for the data integrity, for the privacy of the customers who share multiple data, sensitive data across these platforms?
I think it's a very, very deep question, and I don't think we have the time. But offline, I'm happy to answer. I'm sure the panelists will tell you. The data rules in India are getting as tough as anywhere else. And I think that is a protocol we need to all get around it as a association and then mine it. Because everyone realized that data is important. So frankly, if we didn't have the data on the markets, how would the algo traders make so much money? So I think it's going to evolve in payments as well. Guys, with that topic, we are all going to build this profitable payment business. And those of you who are investors here from private equity, please choose your stake, okay? Thank you very much. Thanks, panelists.